Welcome back to the Financial Freedom Show. My name is Rob Berger. In today's episode, we're going to be talking more about GameStop, something that I think is going to go down in the history books of the stock market. And it's really gone, frankly, far beyond just the stock market. It's become an issue of the big guy versus the little guy, the hedge fund versus the retail investor. And I'm not quite sure if that tells the whole story, but that's certainly the story that's being told so far. And so we got a lot to cover. We're going to look at where GameStop stock is at the moment. And I'm recording this just before 8 a.m. On Friday, so the market hasn't opened yet, but a lot has happened after hours. Then we're going to talk about the fact that trading stopped on GameStop, as you no doubt know, but we're going to kind of look into the details to try to understand why. There's a lot of conspiracy theories going on, and we're going to take a look at those. Then we're going to look and see how the politicians reacted on both sides of the aisle. The politicians got into this thing yesterday in a big way, and then they started doing what politicians do. Anyway, we'll talk about that. We're going to look at the response by Robinhood, who I think, obviously one of the brokers that halted the buying of GameStop stock. You could still sell, you couldn't buy. Interactive Brokers did the same thing. We're going to understand from their perspective what they're telling the public as to why they did what they did. And then we're going to look at, I guess I call them conspiracy theories, sort of a different explanation for what they did that is far more sinister. And while you might be thinking that you could dismiss sort of the conspiracy theories, it turns out it wouldn't be the first time this sort of thing has happened where Wall Street has taken action to protect its own. We're going to talk about that. Then we're going to look at the Robinhood lawsuit. There's already, of course, a class action lawsuit. That took about 4.5 minutes to get filed. So we're going to take a look at that. I'm going to tell you why I think it will not succeed. There's two reasons why the Robinhood lawsuit will fail, in my view. I'm going to talk about that. And then we're going to wrap up with sort of an analysis of where things stand, particularly the following question. Yes, everyone agrees that GameStop's stock price is completely divorced from the fundamentals of the company, but one might argue, so what? Isn't Tesla's? I mean, Tesla's trading at a PE of somewhere around 1,600. What's the difference? So we got a lot to get to. Let me first show you on the screen the current market price. You see it closed yesterday at 193.60 all the way down here, and it was down 44% for the day. Of course, that's not surprising, since for a big part of the day no one could buy it, right? But in after hours, and by the way, those restrictions have largely been lifted. We'll talk about that. You can see after hours, up until just a few minutes ago, it's already gone up to $315. Now, you remember from my video on this earlier, I wondered if there was going to be a big crash this week. Of course, we'll see. I mean, Friday's market hasn't even opened. But of course, it really underscores the fact that no one can predict future price movement of a stock, even within the next day. And I even said that in the last video. And here's the important thing. It's one thing to predict what's going to happen. It's another thing to actually invest based on those predictions. Could anyone have predicted 24 hours ago what happened yesterday? I don't think so. Certainly no one that I read made such a prediction, that Interactive Brokers, that Robinhood, that Apex Clearinghouse, what they did. And of course, the reaction from the market, as you would expect. And to me, this just enforces, it's one thing to predict, it's one thing to try to understand the markets, to understand the economy on a macro or micro level. I think those are all worthwhile endeavors. But please don't trick yourself into believing you've got this figured out and you can make winning bets consistently on the basis of a prediction of what a stock is going to do in the short term. And actually, the worst thing I think that can happen to a trader is that they have a very big win their first time out. Like, so if someone's made a fortune in GameStop and this was their first time trading, it's like they're hooked now. They're like, it's like a big gambler who wins big the first time and then spends the rest of their life trying to hit that big one again, and they just never do. Or they hit the lottery first time out for $100,000 and they think, I've got the touch and now I can just keep playing. Eventually I'll hit the $1 million lottery. The odds of that happening, not good. But in any event, so that's my own investing lesson for the day. Let's get to what happened. So Trading stopped yesterday, as we know. Robinhood shut down purchases of GameStop. Interactive Brokers shut it down. And that had an effect on the whole market, right? Because, so one of the things Robinhood said was, don't worry, you can still sell, you can close a position, but you can't open, you can't buy. And of course, if you think about that, you say, well, wait a minute, well, what if every broker did that? Then I can sell, thanks Robinhood, who am I going to sell to? if no one can buy, how's this going to work? Now, of course, not every broker followed suit, but it had a significant impact on the market. Keep in mind, the way this works is you've got, say, an investor, you and me at one side, we interact with a broker, right? Robinhood, Interactive Brokers, for example. The broker then interacts with a clearing house. A broker and a clearing house can be one and the same. Many times it's not. But there's a clearing house. And then there's a broker on the other side of the transaction, right? Because we're buying and selling with someone else. And then that broker has their own client. And the client can be a retail investor, can be a hedge fund, whatever, right? And so when a large part of the market, when these large brokers say, we're not going to allow buying, they can't just do that in isolation. It affects the whole system, right? And so let me read you an email I got, not from Robinhood, not from Interactive Brokers, but from N1 Finance. And I should back up. We focus on GameStop, but that wasn't the only stock, of course, that was affected, right? Robinhood stopped trading on 13 companies, including AMC and COS, right? So it wasn't just GameStop. Anyway, so here's the email I got from M1 Finance. And if you're a client of M1 Finance, you got the same email. Please be advised, our clearing firm, so that's the company that sits in the middle of all this, right? Our clearing firm, Apex Clearing, is not allowing purchases of the following securities. And GameStop, AMC, and COS were the three in this case. Any estimated purchase of these symbols will be canceled during the trade window. All right. We sincerely apologize for this inconvenience. This was not our decision, but M1 no longer has the ability to place buy orders in these securities. So they can't even place a buy order, right? Remember, on the other side would be a sell. They can't place a buy order. We strongly disagree and are frustrated with this decision too, and we are in communication with all involved as we try to resolve this. We will continue to relay additional information as we have it. Now, this limitation got lifted when? 4:05 p.m. yesterday, right? 5 minutes after the close of the market. The point is, the actions that were taken had a ripple effect, of course, throughout the entire system, as you would expect it to. Now, there were a ton of reactions. I want to start with the politicians, partly because it's just fun to hear what the politicians have to say about this. So AOC, she got into it, and here's what she said. This is unacceptable. We now need to know more about Robinhood's decision to block retail investors from purchasing stock while hedge funds are freely able to trade the stock as they see fit. So that was her sort of response to this. I'm always a little troubled by that kind of response. And I hope this is where we need to kind of really think about what's being said and what's happening. And who's saying it? By the way, this isn't a political statement because we're going to get to Cruz in just a minute and Trump Jr. So the other side of the aisle is going to have their silliness in just a moment. The issue, though, is it's a great story to tell. Hedge funds versus you and me, the individual trader, investor on Robinhood. But that's not really what was going on. It's not Robinhood versus hedge funds. It's the folks that use brokers like Robinhood and Interactive Brokers who stopped trading of the stock versus everyone else who uses brokers that didn't stop the trading. And that might include hedge funds, but it also includes folks like you and me, right? I don't buy stock. I don't trade on Robinhood or Interactive Brokers. I use Vanguard. Now I use Bank of America. I use Fidelity, right? And I didn't have those same issues. I don't have an interest in GameStop, but I could have traded yesterday. So I appreciate from a political perspective that you get a lot of juice when you make this issue out as solely hedge funds versus the little guy. But that doesn't really, I don't think, give justice to the story because that's not what's really happening. It's certain brokers, and we'll talk about why, shutting down trading versus others that don't. And that can affect hedge funds for sure, maybe in a positive way. But not every retail investor was shut out of trading GameStop. And we shouldn't pretend that that's the case. So that's my own view. But Ted Cruz, let's go to the Republicans, he fully agrees with her. So they're both in the same boat. He agrees with her, and he sees this very much as a hedge fund versus retail investor. And again, what I'm talking about here is not the short squeeze and Wall Street bets. I'm talking about the Robinhood and Interactive Brokers stopping the trading yesterday. And I just don't think that really gives a full picture, a clear picture of what really happened. Because it wasn't as if the hedge funds were free to do whatever they wanted and every single retail investor was restricted. That's just not what happened. A lot of retail investors were restricted. And yes, hedge funds don't use Robinhood's app. So that's certainly true. But there were plenty of retail investors that weren't affected, at least not directly. And so anyway, that was their take on it. Now, I should add, let me just show you this on the screen. AOC didn't like Cruz agreeing with her. So here's what she had to say. This is the fun part. I am happy to work with Republicans on this issue where there's common ground, but you almost had me murdered 3 weeks ago, so you can sit this one out. Happy to work with almost any other GOP that aren't trying to get me killed. In the meantime, if you want to help, you can resign. So I think things in Washington are functioning pretty much, as we would expect. Now, Donald Trump Jr. weighed in. Here's what he said. It took less than a day for the big tech, big government, and the corporate media to spring into action and begin colluding to protect their hedge fund buddies on Wall Street. This is what a rigged system looks like, folks. I think of all of the politicians, I guess he's not a politician, but political class, whatever. This one angers me the most, actually. And it's not because there wasn't collusion. It's because we have no idea if there was. That's the story that people don't want to acknowledge. It's easy for me to sit in front of a camera, for someone to sit in front of their keyboard and tweet and talk about collusion. And I think if you're like me, you think, yeah, that's possible. I really want to know about this. Were the hedge funds communicating with Interactive Brokers and Robinhood or not? What really motivated them to do it? We're going to talk in a minute about what they said motivated them to do it. But the reality is, we don't know if any of this is true. And this is where this sort of rigged system nonsense. Here's the thing. Sometimes the system really is rigged, as we all know. And when that's the case, it needs to be addressed. The problem is, when everyone is saying everything is rigged, then we no longer know what the truth is. It's hard to figure out where the system really is rigged so that we can fix it when you have all of this sort of unsubstantiated, the system is rigged tweets coming out from everyone, at least from folks that people listen to. Honestly, I don't listen to any of the three that I just mentioned, other than they happen to talk about something that's of interest to me right now, and that is the proper functioning of our securities markets. So I think of all of the sort of responses, this one sort of aggravated me the most. It's not because I believe there wasn't some issue here, but because we still don't know. And here's the thing. Folks are calling for the SEC to investigate this. Honestly, so I was an enforcement attorney for the Public Company Accounting Oversight Board. They regulate auditors of publicly traded companies and auditors of broker-dealers. So I was on the audit side. I worked with the SEC. But my response is, forget the SEC. They don't carry guns and badges. They carry business cards, right? I mean, and by the way, no offense to the SEC. Yeah, let's get the FBI involved. They carry guns and badges. They're the ones that need to be issuing subpoenas and finding out, was there collusion between the brokers on the one hand and Wall Street and the hedge fund entities on the other. But I hate to disappoint the folks that if they got their pitchforks out, it's very possible the answer will be no. Very possible. And if you think about it from Robinhood's perspective, if that were the case, if hedge funds called them up and said, you got to shut this down. The short squeeze is killing us. You got to stop the sale, the purchase of GameStop stock. And they say, okay, they're the lapdogs of Wall Street. Sure, got it. Yeah, we don't want to upset you guys. I mean, if that comes out, they're done. Not to mention the securities violations, possible criminal issues. They're done as a company. So if all they care about, if they don't care about any of their clients, they just care about their own survival and own self-interest, it wouldn't make sense that they would do that. Doesn't mean they didn't, but this is where we really need to get the proper authorities in to investigate, and I believe that will happen. And again, I hope it's not just the SEC, but where the proper authorities need to get in and investigate, but we're not going to know for weeks. So just simply spouting off conspiracy theories without evidence, to me, doesn't actually help us. All right. So having said that, all right, Rob, what did these Interactive Brokers and Robinhood say? What's their explanation? What's their justification for what they did? Well, that's a great question. So they were both on shows, CNBC mainly, yesterday and this morning. Thomas Peterffy was on. He's the chairman of Interactive Brokers. And here's what he basically says. And he laid out what I described a minute ago. You've got the investor, a broker, clearinghouse, a broker on the other side, an investor on the other side. And when you're dealing with options, there's shorts and longs, they offset each other, and there's winners and losers, right? I mean, it's a zero-sum game. And as the price of the underlying stock moves, there are more winners, and the winners get, win more, the losers lose more, and as the stock moves. And what he said was, look, the brokers on either side of this transaction, there's net capital requirements. They're funding into the clearinghouse so that the system can function properly. And his concern, he said, look, Interactive Brokers isn't at risk. We've got $9-10 billion in equity. We can handle the capital requirements needed to execute the trades at the volumes that they're happening right now. And of course, when you're dealing with margin, and of course, many of them restricted margins on these stocks, set up additional margin requirements. But when you're dealing with margin, when you're dealing with options that for relatively small amounts of money can influence a large amount of stock, right? You have these capital requirements. We can handle it. Don't worry about us, Mark. In Interactive Brokers, we've got $9-10 billion in capital. We're concerned with brokers on the other side of this trade. They might not be able to handle it. And if their clients can't come up with the capital needed to cover all of this, then that's going to put us, Interactive Brokers, and our clients at risk. And so we're going to take this action to protect that system. Now that's, believe it, don't believe it, that was Interactive Brokers' response. Now, Robinhood basically said the same thing, but in a different way. What Robinhood said was, we're in trouble. We're in effect, they're saying, look, we're the troubled broker that Interactive Brokers is worried about. We're the ones that could have some trouble here meeting the capital requirements necessary given all of these transactions. So we have to shut this down. But, and I'm sort of jumping ahead here, overnight, they raised $1 billion. Now think about that. Overnight, they raised $1 billion. That to me, that's just unbelievable. It tells you how much money is just in the system right now. Oh, we're short a little capital? All right, well, thank you for your $1 billion. Don't worry, market. We've now got an extra $1 billion of capital. We can handle this now. For yesterday, in the days before, they were using lines of credit. That's normal, right? But of course, lines of credit don't go on forever. So in many ways, the story that was coming out of Interactive Brokers and Robinhood yesterday was they're consistent. I mean, they're basically the same story, just from two different companies with two different capital positions. But again, Robinhood has raised $1 billion. We'll see how smoothly the markets work today, because I expect, I'll make another prediction for today. It's going to be a wild ride, and I'm looking forward to watching it. Again, I'm not in this trade at all. I will, and I never will be. But we'll see how Robinhood can handle it today. But that's the story. That was their story. Now, is everyone believing their story? Well, no. Let me show you on the monitor here, if I can pull it up. This came from a Twitter account, and it's an image from Odin19199. Now I know you're wanting to know, Rob, who is Odin19199? I have no idea, no clue. But I can tell you who Odin19199 says he or she is. I work for Robinhood. Don't kill me. Low-level technical crap. I'll try to keep it clean. Comp science major, not finance side. Guess what we overheard today? By the way, I don't know who the we is, but other people at Robinhood. Vladimir, yes, founder Vladimir, and the C-suite received calls from Sequoia Capital and the White House that pressured into closing trading on GameStop, etc. I guarantee you the same took place at E-Trade and the others who closed trading. All right, let's stop there for a moment. That is an amazing allegation. Now, the lawyer in me wants to cross-examine this person, right? My first question would be, were you in the room when they had this phone call? Were you on the call? I'm guessing probably not, but I don't know. That would be my question. Who else was there? Did you record it? Did you take notes? Why were you there? If you're just involved in low-level tech stuff, why were you in, I guess, Vlad's office in the C-suite as part of the call? By the way, there could be great answers to this. Maybe he's like, well, they couldn't get the Zoom call to work properly, and so I had to be there to set it up. I'm not kidding. I've worked private practice, in-house, and in the government. And I can tell you, after taking hundreds and hundreds and hundreds of depositions, you hear some crazy stuff. It's unbelievable. Anyway, that could very well be true. But here's the thing, we don't know. And then he says, I guarantee you the same took place at E-Trade. I don't know what that guarantee is based on. Why does he or she believe that? That's what I'd like to know. But look, I'm just the reporter here. I'm just telling you what happened. I read this, and first of all, the White House, is that how Biden wants to start his administration? Hey, of all the brokers out there, call Robinhood and for the love of God, tell them to shut down trading of GameStop. I'm skeptical. I'm just going to tell you I'm skeptical. I know the David and Goliath, hedge fund versus retail investor. It's easy to say, yeah, this is what happened. This makes sense. It's the rigged system. Maybe it did, but I'm skeptical. I'm just going to tell you that. And then it goes on, as you can see. But that's sort of the counterpoint. What this person is saying is, look, it had nothing to do with capital requirements. It had nothing to do with Interactive Brokers protecting its clients. It had nothing to do with Robinhood trying to meet the capital requirements required to maintain the market in GameStop and other stocks, and nothing to do with that. They got a call from Sequoia and I guess probably not President Biden, someone in the White House. I find that hard to believe, but that's the story. Now, from all of that, you might say, well, has this ever happened before? I mean, what this person is saying, I mean, is it totally preposterous? Well, actually not. And in fact, you can go back to like the 1910s, I think it was. And I read this from Nick Majuli, who's with Ritholtz Wealth Management. Great Twitter account, by the way. You should follow him. And apparently this happened before with Piggly Wiggly. So just a short 2-minute story. It's worth it. Trust me. You go to a grocery store, you don't think about it. You walk in the grocery store, you take your cart, your basket, whatever, you pick stuff off the shelves, you go up front, you buy it, and you're out. Or today you order it and they deliver it to you. But that's not how it always used to be. 100 years ago, you gave your order to the store and they went and picked all the stuff. You didn't like walk through the aisles. They picked it all for you, totaled it up, you paid them, they brought your stuff out and off you went. Well, a guy named Clarence Saunders started Piggly Wiggly and he had an idea. He said, you know what, I'm going to let you come in. Why should I pay people to pick this stuff for you and pay them? I'll let you come in and pick it for yourself. Then you get to pick what you want. Maybe I can pass some cost savings on to you. And you come up front, you check out. Basically what we're used to today. And it was a big hit. And it was a very successful company. Started franchising. Some of these stores started to go bankrupt up in the Northeast, but the company as a whole was doing great. But Wall Streeters found out about the bankruptcies. They started shorting the stock. It went from like 50 down to 40. And Clarence was like, they're going to run me out of business. So he borrowed $10 million. Now, this is 100 years ago. That's a lot of money now. It was a lot of money back then. And he took it, went to Wall Street. And his plan was, I'm going to squeeze the shorts. All these people are shorting the stock. I'm going to corner the market on my own company's stock. There's only like 200,000 outstanding shares. Long story short, he ended up buying like 105,000 shares. And so he cornered the market. Of course, he's buying, so the price is going up, so the shorts are getting squeezed. And now he has all the stock. If they want to close their short and sort of stop the bleeding, they got to buy from him. So, they were down here in the 40s or 50s. He's now well over, 2, 3, 4 times that amount now. And he's now got them, well, where he wants them. But here's what happened. They had a deadline, right, to close these shorts. It was like a Friday, I guess, or Thursday. And the Wall Streeters, the protecting their own, said, you know what? We're going to break the rules. Technically, they may not have broken the rules, but certainly they broke the spirit of the game, right? And they said to the shorts, we're going to give you till Monday. Yeah, you can come up with the stock, the shares that you borrowed, right? You can pay them back on Monday. That gave them time to go out to the mom and pops who owned Piggly Wiggly out in the country. How they did this, I have no idea. And find the shares out there, of course, at a bargain and close out their positions by Monday. Long story short, poor Clarence Sanders ended up going bankrupt. It was a mess. So yeah, this has happened before. So it could be that Odin 19199 is spot on. Maybe Biden had someone call Robinhood and tell them to stop allowing the purchase of GameStop. I'm still not buying it. I'm just skeptical of that. Having said that, there is a lawsuit. Let's talk about that. You're looking at it on the screen now. It's a class action, and filed in the Southern District of New York, which is where you would expect this type of class action to be filed there in New York City. And let's. I'm going to scroll down. Let's see here. Here we go. I'm going to scroll down. I think it's, yeah, here we go. Paragraph 16. So first they say on or about January 27th, they stopped trading, right? That's basically what it says. The key provision is 17, I think, right here. Upon information and belief, Robinhood's actions were done purposefully and knowingly to manipulate the market for the benefit of people and financial institutions who are not Robinhood's customers. So this is Odin 19199, right? This is they did it not to protect their customers, but to help out people who aren't even their customers, namely the hedge funds of the world. Now let's sort of break this paragraph down. You might be thinking, upon information and belief, who writes and talks like that? Well, lawyers do. And I can interpret that for you. That's a term of art in the world of pleading. That's what they call it when you file a complaint. This is a pleading. And what it means is, here's what it means to the layperson. We have absolutely no clue if this is true. We're not entirely making it up. We think this is what could have happened, but we don't actually have any evidence of this. And you can't just make a statement of fact that you have no support for, well, unless you put in there upon information and belief. Then you can pretty much plead whatever you want. Technically, that's not true, but as a practical matter, it happens all the time. I've never been on the plaintiff side of a class action. I've defended plenty of them, and most class actions have this upon information and belief. All right, now, if we break the pleading down, Robinhood's actions were done purposefully and knowingly. Let's stop there. First of all, of course they were. It wasn't an accident that they stopped the trading. So that part of the allegation isn't damning, right? That's not the problem. It's to manipulate the market, and manipulate that's the specific word they want to use, because you can't manipulate the market. That gets you into trouble, right? And manipulate it for the benefit of people and financial institutions who are not Robinhood customers. That's the allegation. Now, I think this lawsuit's going to fail, and I think it's going to fail for two reasons. The first is there's an arbitration agreement in Robinhood's user agreement. If you're a Robinhood customer and I signed up, I've never traded on it. I did get my one free share of Macy's, so I've got that going for me. You probably didn't read the user agreement. I can assure you I didn't. Who reads user agreements? If you want to see it, here's the user agreement. Restrictions on trading we're going to come back to in a minute. Let me just search for arbitration. Here we go. Arbitration clause. Yes. So here's the deal. Elizabeth Warren, senator from Massachusetts, came out yesterday. She weighed in on this as well. And her complaint was that there's an arbitration agreement. Now, why does she hate arbitration agreements? Well, so let's back up. If you don't have an arbitration agreement, you can do things like file a class action lawsuit, and you have a right to a jury trial. Now, I've tried jury trials. I've tried cases before juries. I've tried bench trials. That's where the judge is the fact finder. There is no jury, just a judge. And I've tried arbitrations where you have an arbitrator. I can tell you as a consumer, without question, in a one-on-one lawsuit, one consumer sues a company, arbitrations are the best. I know that in our country, we hold up on a pedestal jury trials. They're terrible. I mean, first of all, they're 10 times as expensive. They take 10 times as long to actually get from filing a complaint to a jury trial, unless you're in the Eastern District of Virginia, known as the Rocket Docket. And I've tried cases there. It's horrible. And the jury's decisions are, I've been on a jury. I was a 4-person on a jury during the week of 9/11. We actually had to leave, of course, on Tuesday, in that horrible, horrific day. But it was a medical malpractice case. I told them during voir dire, I'm a trial lawyer. I kind of got up expecting I would be dismissed. They said, okay, you're fine, take a seat. And then the jury picked me as the foreman, 4-person. What do they call it now? Anyway, jury trials are terrible. Jurors decide cases on the craziest of reasons. Arbitrations are actually quite good. And the outcomes are by and large, I think, sensible. Here's the problem. If there's an arbitration clause, what Robinhood can and they will do against this lawsuit is they'll say, hey, this has to be sent to arbitration. We have an arbitration clause in our agreement, so you can't sue us in court. And there's the Arbitration Act, there's a federal law that protects this. The Supreme Court has upheld it. Judge in the Southern District of New York, you have to send this to arbitration. And in arbitration, you can't have a class action. Sorry. Now, as a Robinhood user, as one person, you can bring a case against us in arbitration. And if 1 million Robinhood users want to file 1 million arbitrations, they have every right to do that. But you can't do it as a class action. And that's the part of arbitration that I think Elizabeth Warren is really fighting against. I'm not going to get into whether that's a good thing or a bad thing. There are pros and cons on both sides. But I can tell you that the response to this lawsuit will be dismiss it because there's an arbitration clause, right? Now, let's go now to paragraph 16. This is the second reason this lawsuit will likely lose, and it's this. You probably didn't read this when you signed up for Robinhood. I didn't either. Restrictions on trading, and it's this very first sentence. I understand that Robinhood may, in its discretion, prohibit or restrict the trading of securities or the substitution of securities in any of my accounts. Done. Case over. Now, it won't quite be that simple. Even in arbitration, if it came out that, sure enough, they were doing this to help out the hedge funds, it will be interesting to see how any fact finder, whether it's a jury, it won't be, or an arbitrator, would handle it. It wouldn't be quite as simple as, hey, judge or arbitrator, here's paragraph 16, read the first sentence. But it could be. I mean, the reality is brokers have the right to do this. And that's why when you're picking a brokerage, it's important to pick one that has enough capital to handle days like yesterday. Now, that's one answer. Another answer is to invest in a different way. I'm not involved in this trading. I invest long-term. I buy stocks that I hope I never sell. So I've never had to worry about days like yesterday. But if you do, this is some of the things you need to think about as you're picking your broker. Having said all of that, back to the lawsuit, I think Robinhood will win it. And I think actually they'll win it pretty quickly. Now, I mentioned that Robinhood overnight has raised $1 billion. And so we'll see how the trading goes today. But I want to address one other issue in today's video. This is a CNBC article that you're looking at. And they were talking to Todd Gordon, who's one of their, analysts, I think. And he says there certainly needs to be regulation with GameStop. And then he says, calling the mania a huge distraction from earnings season and the big tech bull market. I just don't want these new investors to gamify the investing game too much. I got to tell you, that really hit me the wrong way. I mean, first of all, what do you think hedge funds are doing in the quants? And, that's gamifying on a massive scale. That's financial engineering that adds absolutely no value to life as we know it. So to hit up and to hit the small guy, this is where the sort of David and Goliath story does come front and center in my view. To then say, well, you're just gamifying it. I mean, give me a break. That's just my perspective. I think that's kind of ridiculous. But here's really what I wanted to get at, and it's this right here. He says it's a battle against the establishment, Gordon said, emphasizing that retail investors are becoming more comfortable overlooking fundamentals in favor of visionary leadership, as they have in stocks such as Tesla. And I've seen this before where some say, well, GameStop is divorced from fundamentals, but hey, so's Tesla. Tesla's trading at like 1,600 PE. And this is where I think comparing GameStop and Tesla is ridiculous. So first of all, I don't know that GameStop has got visionary leaders on the level of Elon Musk and Tesla. I mean, Elon Musk is sending like ships to space and electric vehicles that can go 300 plus miles on a single charge. He's not selling video cartridges at a retail outlet in a mall. So to me, comparing them is silly. But I think there's something else sort of more fundamental than that. Tesla is part of, obviously, the electrical vehicle market, which is really just beginning. You may have read that GM yesterday announced that by 2035, they're going to stop selling gas-powered vehicles. That's the world we're headed to. It's going to be an electric vehicle world, and Tesla is at the forefront of that. Now, by the way, that doesn't make it a good investment at its current price. I spent some time looking at it over the last couple of weeks before their last earnings announcement, wondering should I invest? I'm a value investor, so how in the world can I justify buying a stock that's trading at a 1,600 PE? But I started thinking, well, wait a minute. He talks about selling like 20 million cars a year by 2030. What would the stock be worth if he could actually do that? So if I'm willing to stay in this for a long time, maybe I could argue some sort of value play. It sells 500,000 cars now, so sold in 2020, so it would be selling 40x cars. Even if it increased its revenue, its profits by 40x, and there's more to the company than cars, and the margins will no doubt change over the next 10 years, particularly, by the way, as more competitors come in. So it's not quite that simple. But even at a 40x growth in profits, if the price stayed where it is today, it'd still be what? A 40x PE. And I'm thinking, well, that's still too high. So I just couldn't bring myself to purchase Tesla shares, as great a company as it is, even though I just ordered a Model X. So I got that going for me, although I'm not confident that half a steering wheel is going to cut it. So Elon, if you're watching this video, hopefully you'll think twice about the half a steering wheel. I'm a little worried about that. But the point is, yes, Tesla is divorced from fundamentals, just like GameStop is, but to compare the companies and say they're divorced from fundamentals in the same way is just silly. If Tesla is divorced from fundamentals by this much, GameStop, I don't know if you can see it on the screen, is divorced from fundamentals by that much. It's night and day difference, and GameStop stock will crash. And it'll crash on its own. Forget what Interactive Brokers and Robinhood did yesterday. It will eventually crash. It'll crash back down. The question is when. And that's the problem, by the way, with being an active trader. It's like being a gambler. How do you know when to stop? How do you know when you've had enough? When is it good enough? And the fear of missing out can get a hold of folks where they think, I don't want to sell now because it could just go up by 300% tomorrow. And I get it. But that's the problem with traders. The trading is you got to figure, even when you've made the right trade going in, how do you know when to get out? And I think that's the question that every person in GameStop right now is asking themselves. And I think when enough people say, okay, I've made enough, I'm getting out, we're going to see this thing fall quickly. Is it today? I don't know. Let's go back as we close out this video and see where we stand. Well, we're at 311.99. So it's going to open up huge today. Where it'll end, I guess time will tell us. Well, that's my take on GameStop, the lawsuit, the politicians, the conspiracy theories, everything else. Feel free to leave comments below. Would love to hear from you. Just be kind. Until next time, remember, the best thing money can buy is financial freedom.